So in 2011, when we started seeing that the world was going to come back already to life, we started then buying small little garden apartments. Actually, we started buying single family homes. I started buying one by one to learn how to really have a rental business. And we started doing one by one. I bought 16 homes. My daughter at that time decided that she didn't want to go into college anymore. She wanted to drop out because it wasn't for her. She wanted to become an entrepreneur.
Yep.
So she came along the ride with me and Bobby, and we started buying small little units. We started buying homes. Then we went into duplexes, triplex, fourplex. Then we started buying garden apartments at, 10 doors, 15 doors. And we went like that. From 2011 to 2017, we ended up buying about 330 units altogether. Wow. And we had bought them, and that time in 2017, now the multifamily business is hot. I mean, everybody wants to get into well, still to today, this is still.
Yeah,
but in
still
2017, everybody was coming up to us and saying, "Hey, could you sell us your unit, your twoplex, your fourplex? We want the garden apartments." And we were like, "No, we don't want to sell. We're long-term holders." But in 2017, we decided, you know what? We're going to get rid of all of our small units. Now that we understand the business, we've been managing and buying and doing everything ourselves. Let's sell all the small units, and now let's go buy big complexes. Mm-hmm. We did that, and we sold all of our 300 and something units in 90 days. Sold and closed.
Wow.
In 90
That's
days.
a good quarter.
Yeah.
That's
yep. And we made a nice chunk of money
Yeah.
in that process.
Mm-hmm.
And we took all that money and we bought big complex. We started buying only 100 plus stores.
Got it.
Now today we're about 2,600 units on our own. We have other joint ventures with other investors that we have, but we don't manage them. We're just a passive investor with them. But on our own, that we buy, that it's all controlled by us. About 26 units to date.
Got it.
So
now, would you recommend, like, say if somebody wanted to be where you're at in real estate, would you recommend they go through that process of like starting with single family and then moving up? Or because isn't there, and you might have one yourself, I'm actually not sure, isn't there like funds or something like somebody could pay like you to just have like a small monthly residual from your 20?
Those are funds.
Okay, and then we don't, if the person does that, we don't even have to look or think.
Right.
We already know you got it.
Exactly.
Okay.
There is funds like that. So the difference between owning your own and putting your money in a fund, that's a passive investor.
Yeah.
You have no say so when they buy, when they sell, what they buy, what they're going to put in as, CapEx into the building. What is their returns going to be? They guarantee you a 5-6% return a year. That's all they have to.
Okay.
So, and another thing with that is that you don't get paid on a monthly basis on some of them. Others you do.
Yeah.
On some you have to wait either quarterly or once a year, or so it all depends on what you want to do with your money.
For sure.
So,
but
yes,
it seems like you wouldn't recommend
you're not going to
that,
learn.
so.
The problem is that you're not going to learn. No fund is going to sit there and tell you, hey, this is the way we did it. This is what we did. This is what. So it all depends. Do you want to be a passive investor and just put your money and get a return on an annual basis? It's the best thing to do.
Yeah.
Now, if you want to be more active so that you could have generational wealth for a long term and that you could create wealth in your portfolio, you need to do it yourself.
Yeah, that makes because I'm assuming on some of yours, like you've had some like huge wins, right? So I mean, 5-6% is like, I don't know, that's kind of like even below the stock market sometimes. Isn't it? Or it's in the same
but
range.
it's so safe that
it's
you know
safe.
what I mean.
Okay.
You're not gonna, unless you put your money in a fund that they're scammers. But normally, you're gonna get your return. You're gonna get that return no matter what. You're not gonna be.
I like that. Okay.
It's a very safe, steady return. Mm-hmm. You're not gonna be that volatile that you're gonna have that down, up, down,
like
up,
Bitcoin.
no, like Bitcoin, like stocks. So unless if you come again, if you have this, financial crisis that we had back in 2008, that's a different story. Everybody failed there. It wasn't that they wanted to. It was just the whole world was in a financial crisis.
Because we just kind of had one. It was obviously a lot shorter than 2008, but like maybe similar. I don't really recall 2008 because I was like kind of too young.
Yeah.
Like I didn't feel the effect. But for this last one, do you kind of think like it is really safe even during like a crisis, because people still gotta although
live.
Wasn't there something where like they could force the people renting the properties to not evict people for not paying rent?
So now during COVID,
Yeah.
we had that. We had
Okay.
yeah, we have some I'm going to say stupid ass rules here that the states have created, that the tenants didn't have to pay, but the owners
but
of
you
the
still had to
building
pay.
still had to pay their mortgage,
I know, right?
their rent.